So let's come to the next case study, right? This case study is all relating to the bank audit. Okay. Right, so Subhadra is conducting the statutory audit of a branch of FNB Bank. The branch is having deposits of 450 crore and advances of 300 crore respectively, reflected in the financial statements for 33. While performing the audit procedure, she noticed the following. While reviewing the advances of the branch, she came across the following particulars of two cash credit accounts: name of the borrower, sanction limit, value of primary security, collateral security, net worth of the borrower, and the net worth of the guarantor. Following information is given in respect of the above noted accounts. Information pertaining to KT Fab as on 31st March, right? Drawing power and the outstanding balance. Okay. The outstanding balance in the account has remained for OS has remained for more than 9.5 crore, beginning from 31st December 32 till 31st March 2033 on all days. Information regarding the PM record, right? So as on drawing power and the outstanding balances. Both units are working and their financial position is satisfactory. The branch has classified both the accounts, right? That is the KT Fab and the PM Decor. Both the accounts have been classified as standard. On reviewing the statement of accounts classified as NPA as on 33, she finds that an education loan was granted to son of Mr. X, a customer of the bank, for pursuing a short duration technical higher studies abroad for 50 lakhs, sometime back, repayable in 5 years. The loan was granted against the security of the residential house of X, having the value of the 60 lakh assessed by the bank's panel valuer. However, the name of the bank's empanel valuer has now been removed due to certain irregularities. Later on, the value of the residential house got reassessed from another valuer, and he gave a report reflecting the realizable value of the residential house only to be 20 lakh. Meanwhile, the installment in the education loan account was overdue for 110 days as on 33. The account was classified as standard asset till 32. While verifying the deposits of the branch, she noticed that inoperative accounts for less than 10 years are to the tune of 5 crore reflected in the balance sheet of the branch. She plans to focus her audit procedures on this segment too. One of her audit team members has suggested the following audit procedures in this regard for the inoperative accounts. Verified that there exists a system of informing the customers of the account becoming inoperative. Identification of the cases where there is a significant reduction in the balance as compared to the last year. Testing the debits in the inoperative account and verifying the auto activation of the inoperative accounts. While gathering the information to be included in the LFAR, she has come across some cases of advance accounts which became non-performing within a relatively short span of time. The details of few such identified accounts are as under: account name, sanction amount, nature of facility, date of first sanction, date of renewal. Right, the branch also sends substantial number of inland outward bills for collection. The bank has a system under which an account of a customer on whose behalf bill has been sent for collection is credited only after the bill has been actually collected from the drawee, either by the bank itself or through its agent. One of our team members has jotted down the following audit procedure for the inland outward bill sent for collection. Verification of outward bill for collection as on the closing date. Verification of the accrual of the commission income in respect of the bill outstanding as on the closing date. So we are talking about the audit procedure for one of the contingent liabilities of the bank, which is the bill sent to the bank for collection. Verification of accrual of charges in account of the customer on whose behalf the bill was sent for recovery, where bill has been returned unpaid. On the basis of the above mentioned facts, you are required to answer the following MCQ. Keeping in view the information in respect of the two borrower accounts, right? So which are the two borrower accounts, the KT Fab and the PM Decor, right? What does it say in the case scenario? Which of the following statement is correct? What does it say? Both these accounts have been classified as standard asset. Right, so the classification made by the branch is not proper. Both the accounts should be classified as NPA. The classification made by the branch is not proper. Borrower account of KT should be classified as standard asset, whereas PM Decor should be classified as non-performing asset. Classification made by the branch is not proper. Borrowing account of the KT Fab should be classified as NPA and the PM Decor should be classified as standard. And the classification made by the branch is proper. Okay. Right, so let's try to analyze what is given in the question. Right, so while reviewing the advances of the branch, she came across the following particulars. Right, so what is the name of the borrower, sanction limit, primary security, collateral, and the net worth of the borrower and the guarantor, and then the information given in respect of the above. Right, as on 31st December, 31st Jan, 28th February, and March. Right, what was the drawing power over there? 9 crore, 9.25, 9.5, and 9.5. And what is the outstanding balance in the account? 9.61, 9.55, right? 9.60 and 9.75. So has it always exceeded the sanction limit? Yes, the drawing power is so much and the outstanding balance has always exceeded the sanction limit, and the outstanding balance in the account has remained more than 9.5 crore beginning from 31st December till 31st of March on all days. Right, so now for CC overdraft, right, so this is the cash credit account. CC overdraft, what do we say? When do they get, when does it become an NPA? When it gets an out of order status. Right, when does it get an out of order status? One, it says if it has exceeded the sanction limit. One, if it has exceeded the sanctioned limit, or second, if there are no credits continuously for the 90 days, or there are the credits but they are not enough even to cover the interest debited during the period. Right, so no credits continuously for 90 days, or there are credits but the credits are not enough to cover the interest debited during the period, then it says the account will become an NPA, non-performing asset. Okay, right, so here, has it exceeded the sanction limit? Yes, in all the four situations, has it exceeded the sanction limit? Yes, so that is why can the account be classified as the standard asset? No, the account cannot be classified of the KT-FAB as the standard asset. Okay, right, so now what does it say over here? The classification made by the branch is not proper. Borrower account of KT-FAB should be classified as standard asset. No, it classified as standard asset, it has to be classified as the non-performing asset. So automatically the second one has to be right. That borrower account of PM Decor should be classified as standard asset. But let us look into the question. Right, here what does it say? What is the drawing power? 12, 12.5, 12.5, and 12.5. And again, what is the outstanding balance? 12.5, 12.25, 12.40, and 12.50. Right, so though 31st December 2032, right, on that particular date it had exceeded the sanction limit. Later on, 31st Jan, 28th, 31st March, right, whether it has exceeded the sanction limit? No, it has not exceeded the sanction limit. Right, in the last 90 days it has not exceeded the sanction limit. That is why the second account, it can be classified as the standard asset, right? So the correct option would be the C. Considering the issues relating to the education loan described in the para 1 of the case scenario, how should it be classified in the books of account as on 31st March 23? Right, so now the loan was given against the residential house and the value of the house was taken to be 60 lakh, and now there has been a reduction in the value of the house to the extent of the 20 lakh. That means there has been more than 50% erosion in the value of the security. What do the RBI prudential norms say? That when there is more than 50% erosion in the value of the security, straight away the account is to be classified as a doubtful asset. More than 90% erosion, straight away to be classified as lost asset. More than 50% erosion, straight away to be classified as the doubtful asset. Right, so substandard, doubtful, special mention account or lost asset, it is to be classified as doubtful. Okay, then as described in para 3 of the case scenario, one of the team members has suggested certain audit procedures for the inoperative account. Which of the audit procedure or the combination of are relevant in such a situation? Right, so we are talking about the inoperative customer account. So that comes under your verification of deposits. Right, identification of cases where there is a significant reduction in the balance as compared to the last year, testing debits in the inoperative accounts, and auto activation of the inoperative accounts. Rather, there should be no auto activation of the inoperative accounts. They should be revived only with the proper authority. Remember, they should be revived only with the proper authority. Rather, in our book, if we come to the verification of the deposits, in the verification of the deposits, right, we have the discussion, right, regarding the inoperative accounts, right? So we look into the compliance, right, the verification of the bank, right, the RBI prudential norms, verification of the capital and the liabilities, right? So here they talk about the inoperative accounts, right? Inoperative accounts, right, are an area of the high this area of the fraud in the bank. As per RBI guidelines, an account should be treated as inoperative only if there are no transactions for a period of 2 years. Right, verify on a sample basis some of the inoperative accounts which have been revived or closed during the year. Ensure that inoperative accounts, there is no auto activation, that they are revived only with the proper authority. And as regards if there is a significant reduction in the balance in the accounts as compared to the previous year, examine the authorization for the withdrawal, right? So significant reduction in the balance as compared to the previous year. Okay. Right, so there exists a system of informing the customers of the account turning inoperative, identification of cases where there is a significant reduction in the balance as compared to the previous year, and auto activation. The biggest problem which we have is with the auto activation. Right, there exists a system of informing the customers on the account turning inoperative, debits in inoperative account, and auto activation in inoperative accounts. No. Right, verify that there exists a system of informing the customers on the account turning inoperative, identification of cases where there is a significant reduction in balance as compared to the last year, and testing the debits in the inoperative accounts. Right, so no auto activation, they have to be revived only with the proper authority. Okay. Quick mortality cases. What is a quick mortality case? Where an account becomes an NPA within 12 months of the sanction. Right? So that's, it slips into the NPA category within 12 months of the sanction of the loan. Right? So that again comes under the RBI prudential norms in the audit procedures for the audit of the advances, right? So if we talk about the audit procedures for the audit of the advances, here there is a discussion regarding the quick early mortality account. Any advance slippage to NPA within 12 months of its sanction is called as the quick or the early mortality case. It is called as the quick or the early mortality case. Okay. Right. So now in the given situation, it says all the 4 cases are quick mortality cases. Only the case of DK Creations is in the nature of quick mortality. Case of ABC, XYZ, DK are in the nature of quick mortality, and cases of XYZ, DK are in the nature of the quick mortality. So let us look into which are the cases of the quick mortality. Okay. Right. So while gathering the information, sanctioned amount rupees in crore, 1 crore, 0.5, 1.5 and 0.75. And it's a cash credit, cash credit, cash credit, and the term loan. And what is the date of the first sanction? 15th of May 2022. Then 1st of July 22. Right. Then 4th of April 21. And date of renewal 4th of April 22. And then DK Creations 1st October 22. And again the date of renewal not applicable, right, over there. Let's come across the accounts, and the details of few of the accounts have been identified as under, and these accounts have become non-performing. Right? So what does it say? These accounts have become the non-performing during the year. So what is the year for which we are doing the audit? Right, 31st March 2033. Right, 31st March 2033. Right, so these years needs to be changed. Right, 31st March 2033. Right, so 31st March 2033, these accounts have become the NPA. Right, so now you need to check if they've become an NPA, whether they have become an NPA within 12 months. Right, so when was this given? 15th of May 15th of May 32. Right, so 31st March. So within 12 months of the sanction, it has become an NPA. Right, next one, 1st July 32. So 1st July, it will go up to the next year, right? So it says within this, it's not within 12 months that it has become an NPA. Okay. Right, so 1st of July, then 4th of April, and again you have the 1st of October. Okay. Right, so what would be the correct option in this case? It says the ABC Industries, XYZ and DK. Right, so ABC Industries, XY and the DK, it says, right? So 4th April 2031. Right, so that is not in the nature of quick mortality, because that has been, for a longer period of time. But these other ones, it says, yeah, within a period of the 1 year. So it has been sanctioned on 1st July 32 and 31st March 33. So within 12 months, it has become an NPA. Again, 1st October 32. So, within 31st March 33, within a period of 12 months, it has become an NPA. Right, so NPA, NPA, and again the NPA within the 12 months, right? NPA within the 12 months. That is why it is known as the quick or the early mortality cases. Okay, so that is the option number C. And one of our team members has planned certain audit procedures described in the case scenario at para 5 for verification of the inland outward bills for collection. Which of the following audit procedure or the combination of the procedure are likely to be relevant in such situation? Right. So again, now for the bills sent to the bank for collection, it says which are the correct audit procedures to be performed. Right. So again, if I come to the right, the verification of the contingent liabilities, wherein you have the bill sent to the bank for the collection. Right, so it says which are the audit procedures which would be appropriate, which are the audit procedures which would be appropriate, right? So what does it say? Procedure number 1, to verify the bills for collection on the closing date, to verify the bills for collection on the closing date, and verification of accrual of commission in respect of bills which are outstanding. No, you cannot accrue the commission for the bills outstanding. Only when the bill is collected, the income should be recognized. To verify the accrual of charges on account of the customer on whose behalf the bill was sent for recovery, where the bill has been returned unpaid, and to verify the accrual of commission in respect of bills outstanding as on the closing date, and verification of the accrual of charges in account of the customer on whose behalf the bill was sent for recovery, where bill has returned unpaid, right? So what does it say? The income should be recognized only when the bill has been collected, right? So what does it say? Examine that adequate internal controls exit that debits the customer account with the amount of bank's commission as soon as the bill is collected is credited to the customer's account. No income has been accrued in the accounts in respect of bills which are outstanding on the balance sheet date, right? So there is no question of the income accrual, right? No question of the accrual of the charges, right? So wherever they say accrual of the commission, accrual of the charges, we say no, there should be no accrual. Verify the bills for collection on the closing date. Okay. To verify the accrual of charges on account of the customer on whose behalf the bill was sent for recovery, where the bill has been returned unpaid, right? So you verify the accrual of the charges, but do you do the accrual of the commission? No, you don't do the accrual, right? Accrual of commission is not required to be done, right? It's the accrual of commission should not be done. So accrual of the charges, right? So it says the accrual of the charges, that is regarding the bill sent to the bank for the collection. Okay, right? So that's an interesting case study. When we study the MCQs, it also gives us an insight regarding what should be our approach when we are studying a particular topic in a chapter. Right, so bank audit, integrated case study 6, we can just write down that it is related to the entire case study is related to the bank audit chapter. Okay.